So, how to invest in real estate? Real estate investments can add diversification to your portfolio, and getting into the market can be as easy as buying a mutual fund. If you ever had a landlord, you probably don't dream of being one. Fielding calls over oversized bugs and overflowing toilets doesn't seem like the most glamorous job, but on right real estate investment can be lucrative if not flashy. It can help diversify your existing investment portfolio and be an additional income stream. And many of the best real estate investments don't require showing up at tenants every beck and call. The trouble is that many new investors don't know where and how to invest in real estate. Here are some of the best ways to make money in real estate, ranging from low maintenance to high. Best ways to invest in real estate by REITs, Real Estate Investment Trust. REITs allow you to invest in real estate without the physical real estate. Often compared to mutual funds, there are companies that own commercial real estate such as building retail spaces, apartments, and hotels. REITs tend to pay high dividends, which makes them a common investment in retirement. Investors who don't need or want the regular income can automatically reinvest those dividends to grow their investment further. New investors may want to stick to publicly traded REITs, which you can purchase through an online broker. Are REITs a good investment? They can be, but they can also be varied and complex. Some trade on an exchange like a stock, others aren't publicly traded. The type of REIT you purchase can be a big factor in the amount of risk you are taking on, as non traded REITs aren't easily sold and might be hard to value. New investors should generally stick to publicly traded REITs, which you can purchase through brokerage firms. For that, you will need a brokerage account. If you don't already have one, opening one takes less than 15 minutes, and many companies require no initial investment through the REIT itself, will likely have an investment minimum. Use an online real estate investing platform. If you're familiar with companies such as Prosper and Lending Cloud, which connect borrowers to investors willing to lend them more money for various personal needs such as wedding or home renovation, you will understand online real estate investing. These platforms connect real estate developers to investors who want to finance projects either through debt or equity. Investors hope to receive monthly or quarterly distributions in exchange for taking on a significant amount of risk and paying a fee to the platform. Like many real estate investments, these are speculatively and illiquid. You can't easily unload them the way you can trade a stock. The rub is that you may need money to make money. Many of the platforms are open only to accredited investors, defined by the Securities and Exchange Commissions as people who have earned income of more than $200,000 in each of the last 2 years or have a net worth of $1 million or more, not including a primary residence. Alternatives for those who can't meet the requirement include Fundrise and Reality Mogul. Think about investing in rental properties. Tiffany Alexi didn't intend to become a real estate investor when she was bought her first rental property at age 21. House hacking allows you to live in your investment property while renting out rooms or units. The setup covered all of her expenses and brought in extra $100 per month in cash. For far from chump change for a great student, and enough that Lexi got the real estate bug. Now at 27, she has 5 rentals and is broker and owner of Lexi Reality Group in Raleigh. Of course, you can also buy and rent out an entire investment property. Find out with combined expenses lower than the amount you can charge in rent. And if you don't want to be the person who shows up with a tool belt to fix a leak, or even the person who calls as person, you will also need to pay a property manager. If you manage it yourself, you will learn a lot of about the industry. And if you buy for future properties, you will get into more experience. Consider flipping investment properties. This is HGTV come to life. You invest in an unappraised home in need of little love, renovate it as inexpensively as possible, and then resell it for a profit. Called house flipping. This strategy is a wee bit harder than it looks on TV. There's a big element of risk, which because so much of the math behind flipping requires a very accurate estimate of how much repairs are going to cost, which is not as easy thing to do, says Mayer. His suggestion: find an experienced partner. Maybe you have a capital or time to contribute, but you find a contractor who is good at estimating expenses or managing the project. He says. The other risk of flipping is that the longer you hold the property, the less money you make because you are paying a mortgage without bringing in any income. You can lower that risk by living in the house as you fix it up This works as long as most of the updates are cosmetic and you don't mind a little dust. Rent out a room. Finally, to dip the very edge of your toe in the real estate waters, you could rent part of your home via a state like Airbnb. It's a house hacking for the commitment foe. You don't have to take on a long-term tenant. Potential renters are at least somewhat pre-screened by Airbnb, and this company's host guarantee provides protection against damages. So this was all. Thank you so much.